Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Looking good, Billy Ray. Feeling good, Lewis. Well, looks like they're having trouble here in River City today, but boys and girls, I posted the chart of the DAX. I posted the chart of the FTSE, and I want you to know, folks, that it's not the end of the world. Whatever happens, it's going to work out okay. But I have an announcement to make, boys and girls. This is going to be very emotional to me because I think that it's time that the old cowboy out in the old West here finally comes to the realization that I don't know diddly squat about the bond market. About 4 years ago, actually it was 2016, I made a bet with my good dearest friend, Mr. Tom O'Brien, that the Treasury bonds would never get above 178 again. And sure enough, last night you can see here with this long-term weekly chart that it has completed an ABCD pattern up here at the 179 level. It did it in typical Treasury bond fashion, very, very quiet markets, easy moves to the upside. And you'll see here that we only had a $9,000 move yesterday in the Treasury bonds to get that. It did that in the face, of dropping open interest. So what I've done, folks, I've gone to St. Petersburg, Florida by email, and I've contacted the crematorium firm of Dewey, Cheatham, and Howe. They are going to take my ashes after I'm gone and hand them over to Mr. O'Brien and his fine son, Thomas. They're going to take them out somewhere in the Atlantic Ocean or Pacific Ocean or some ocean somewhere, and we'll be able to see it. But the firm of Dewey, Cheatham, and Howe is one of the finest crematoriums in the whole state of Florida, and especially around the St. Petersburg area. All right, Billy Ray's done now. Let's get on with the markets. Let me tell you something, folks. They can do what they want to with this bond market, but let me tell you something. You gotta pay attention to this, because when the market does this with no increase in open interest, that's short covering. When that thing is done, I don't know where it's going to be done. It might be done at 140. I don't know. 140, what am I talking about? I mean, 240, who knows? Maybe we'll see negative interest rates, but something really big is out there happening, folks. It's very, very scary in here, and we'll see what's happening. But I will continue to search for the smaller patterns that try to keep you in the ball game. We'll see what's there. It's so bearish out there today, folks. I'll be surprised if the Fed doesn't come in and do something, because these markets are really in very, very serious trouble. If you remember last week, we talked about the Dow Jones transportation. This is trains, planes, and automobiles and trucks. You notice on that rally that we had this week when the Fed dropped rates, all the transportation index could do was to make a 382 retracement. And then you can see what's happened here, since that 3.8, this was yesterday. That's not even including today. So that's what we're watching. I don't know what it means. It's not the end of the world, but, who knows? Okay, let's take a look here at the chart that brought us to where we are right now. Let me get this up here. Well, I guess I got to do this the right way. Okay, here's where we were last week. If you remember, a week ago Friday, I sent out a special letter because we had hit all of these major Fibonacci numbers spot on and everything. The New York Stock Exchange Index, the Russell, the Dow Jones, and the S&P 500. Since that time, we had a 50% retracement in the S&P, and we had a 38% retracement in the Russell, I believe, and the New York Stock Exchange Index, and we had a 38% retracement in the transportations, and then the transportations is already broken through there. Somebody put a huge play last Friday. Now, if this market closes lower today, folks, below 2,900, and a low today has been 2,915. If we close below 2,900, the low that we had last week was 2,855. If 2855 is broken, you're going to be looking at an ABCD pattern. I'm a pattern guy, guys. Remember, this is all patterns. It's not diddly squat to do with any fundamentals, no MIT stuff or nothing like that. But look at the ABCD structure here. And if you like ABCD patterns, I know some of you do, but this is a very clear one. You can see the market breaks. We rally exactly 50% back on the S&P, and then look what could happen here on the C-mini. We'd be looking at 25.75. Folks, we went from 34, roughly 34 to 29. We dropped 5 points. We could easily drop 5 points. So that's going to take you right down to this level right here. And that doesn't mean that's going to be the bottom. The bottom might be down at the old low from January of last year. We could get all the way down to 23.50 without any trouble if the panic really hits. So we'll see. Well, we could reverse at any time, but we're in interesting times now, folks, because let me show you. This is what's happening, and it's happening everywhere. Unfortunately, it's a fear index. We see it in Tucson. We see it everywhere, and it'll back off a little bit. But you're right. David White has just posted something. You try to be greedy when others are afraid, and you try to be afraid when others are greedy. Boy, that's it. So let me tell you something, folks. There's two perfect examples. That one is the bond market, and the other is the other. Now, we'll see what happens. We're going to go. David, you are absolutely the Mr. Google of all time. He's got a great chart from Charles Mackay, The Popular Delusions and the Madness of Crowds. Men, it has been well said, think in herds. It will be seen that they go mad in herds while they recover their senses only slowly and one by one. I think that's absolutely correct. But we are hanging in there, see what's going on. There's a big things happening. Shane Smolyan will be our guest here at the break. He's going to have some good information for us regarding the virus and the Fed and some other things that I think will be important to look at. But we need to pay a couple attention. Remember, we talked about that position. The euro looked so very, very bad last week. It was just 2 weeks ago, and now we're on the brink of a U.S. dollar breaking down very, very badly. Let's just get this up here. You'll see this strong support here. We have just absolutely shattered it here. Hold on here. Very good, Jay. Okay, that we've broken down now, folks. The euro and the yen have all expanded up. They're very overextended. We've been up 2 straight weeks. I mean, just absolute monster moves from 107 and change up to 113 in the euro, 6 handles, 5 handles in the Japanese yen. And those trades were much easier to do, folks, than the stock market trades for 2 reasons. One, the margin was extremely a great deal less. The volatility was a whole lot less, and there was no thinking in between. It was straight up. And those are the kind that you kind of look at. So let's take a little break here, get back and cover a few other things that may or may not mean something.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I've talked a lot about that battle that's going on here with the stock market and all the fib numbers that we hit that were so, just absolutely perfect numbers. I ought to probably give you a rough idea of how perfect they were. Here's the here's the S&P cash. There we had a 50% rally. Now we're back down there again. You see, if we break below that, that means the people that made that big bet are in trouble. Now, how big they are, I don't know, and who they are, I don't know, but that's just what we're looking at. Another one, of course, here, this is the New York Stock Exchange one. It's one that literally rallied up to 50%, almost, well, just not quite 50% retracement, and then came over. But all of these hit exact numbers. That's the whole thing. Look at this Dow E-mini. I mean, you talk about one that if you don't believe in Fibonacci numbers, hello, give me a break. Now, remember, this is a long-term weekly chart, folks. This goes back to December of 2018. And if we break below that, then you're going to be looking at some real serious problems in here. And let's take a look here at the NASDAQ. This is another interesting because that's the craziest one of all. You'll see here that the NASDAQ also came up here, and we'll see what's going on. I'll tell you, folks, what I've recommended today is, I follow this stuff because it's so crazy overnight. I do watch it and send out stuff as nearly as I can. And what I try to do is to alert, to smaller patterns and stuff. Last night, we had a very interesting situation here where the market was really jumping around. Remember, these levels were a lot different than they were just a few days ago at 3150. But the numbers and the patterns really, they work on any time frame. I just posted a 2-minute one here because the markets are so volatile. You want to try to not risk very much when you're looking at some of these things. So it's important to keep that in mind. But if these numbers fail, we're going to be interesting to see what the folks are going to do that put these big positions on. And believe me, these were monster positions, folks. Look how quickly we rallied 50% in 2 days, and then the Fed came in on Monday. And they might have been the ones, but they didn't do any selling. The real problem is going to arise in the bond market, folks. I really believe that, and the reason why is it's like sending an arsonist to a barbecue pit. And I'm very, very nervous. I watch those bonds all the time. I scalped them last night for a little bit, and I did some on the long side too. But it's going to be very interesting. We're going to see you haven't even begun to see volatility yet, folks. We're going to see volatility. We will see a move. This is a no-brainer. We're going to see a move of at least 1,800 points up or down in the Dow Jones sometime in March. Probably in the next 3 or 4 days would be my guess. Because if we start to break and we close badly Friday, today, do you realize 7 out of the 8 Fridays have been down? And they're followed by lower Mondays. So, watch it. Because if we close lower today, you're breaking the C point. And let's try it again, Larry. You're breaking the B point, and that tells us that we're looking at that potential move down there. And the fact is, I forget what the limits are now. I don't think we're going to see any limits today or not. But look, we had a monster number today, 273,000. Folks, is anybody naive enough to believe that 273,000 jobs added when these companies start losing money? What are they going to do? They're going to lay off people. Look at Facebook. They're in the San Francisco area. They're at home. They have to work at home. Same thing with Amazon and other things. And my boss, Sarah, told me I had to work at home today, which isn't such a bad idea. But it's not the end of the world. It's just high volatility. The really good thing that we don't hear about very much, and I saw it on Bloomberg today, is the fact that there are no little kids dying from this. That's a really good thing. And so hopefully the strain's not going to get any worse than what it is, so we'll pay, close attention to it to see what we're doing here this morning as we open here in the market here in just a few minutes. We'll see. Let me check the pre-market here, folks, to see where we're trading at 29.10. The key figure to watch in the S&P, folks, is at 28.80. If we get below that, who knows? It could go pretty much anywhere. The gold, I've said several times, I've sent newsletters out, videos out every night. We are looking at a price in the gold market of, it's going to be somewhere around 1740, I believe, 1740 per ounce. That was the same number, I believe, that Paul Tudor Jones was looking at, and I believe that we'll probably get there without too much trouble. Those are all in the video and the newsletters that I send out. Silver and platinum still look terrible. They're just not doing anything. I think that has to be with the coming deflation that we might be looking at. But the real trick here, the real problem is going to be in that bond market. I mean, it really is. I mean, been doing this a long time, and I don't know when it's going to happen, but when it does, these people that bought those bonds thinking it's going to be a flight to quality, you're going to wake up some morning. Maybe not. Maybe they are going to go to zero, but that's the way it looks like to me. Who knows? We'll take a look at these as we go through some of the other stuff we're looking at. Remember the Japanese yen. Let's just take a look at that. See, folks, when we were looking at this, you remember I was talking about the foreign exchange because the Japanese yen. Look at the Japanese yen down there at 89. Nobody wants it, folks. It's 94.60 this morning. Look, with never heat. I mean, never backed off. I mean, boom. And the euro did the same thing. The euro went from 107 to 113 and change. I mean, those were the easy ones. And the crude oil, what was trading at 48.60. Now it's at 53. It's dropped 10% in 3 days. Those are the ones that are easier. With the volatility that we're having in stocks, it's pretty tough because the volatility plus the margin on these things has gone totally ballistic. Whereas the margin on the foreign exchange and and the crude oil has not moved very much. So that's it. So at least we have one thing out of the way today, folks, that we know that I'm paid off my debt. I've signed up with the crematorium to pay off Mr. O'Brien and his fine son Thomas for the bet that I made. I don't bet monetarily, as you most know. I play a little poker once in a while, and I play a horse once or twice. I had a horse yesterday, folks, believe it or not. And I really liked the horse. He looked pretty good and everything, but the name just absolutely made me want to throw up. The name of the horse was Fentanyl. Can you imagine a horse owner? He had to be on drugs. Fentanyl, and they named the horse Fentanyl. I said, there's no way I'm going to bet on that horse. Yeah, well, he went off at 50 to 1, and he ran like he was 200 to 1. He finished dead last, so I was glad I didn't do that. Anyway, let's move on to a couple other things that look interesting. If you remember, we talked about the hold on one second. We talked about that possible trade in the soybean meal. That worked extremely well. Hold on just a second here. We'll get this up here. There we go. And it's closed at $3. It was down about $700. We closed around $303, I believe, in the May soybean meal, which started in the right direction. If you happen to do that one, make sure that you put your stop at break even. Stay tuned, folks. We're going to have Shane Smolyan, wolftrader.com, on in just a few minutes.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we have Shane Smolyan, Wolf Trader, on the line. Shane, how are you today?
Good morning, Larry. How are you today?
Well, I'm almost in a state of shock like just about everybody else when we hear about what's going on with the virus. You have a lot of information on viruses and Fed. Could you tell us what you're seeing here, my friend? I mean, folks would like to hear from a sane person what you think is going on.
From a sane person, that's funny. Can everybody see the charts?
Yeah, we're good.
Okay.
Well,
all right.
You're about the sanest person I know.
All right then. I'll take that with a grain of salt. All right. So coronavirus here. We've crossed 100,000 cases, and I have two models here that I use to model this because it looked like it was flattening out at one point. So this blue line down here is these are polynomial models. This is a third degree polynomial, and then this one up here is a fourth degree. And it looks like it's starting to track higher to follow that fourth degree polynomial. But one thing I would say is we have to understand the context of what's going on, because now you have all of these seeded countries that are starting to pop up like popcorn. So of course we're going to get an increase in here. What happened in this flattening part, this first flattening part, was this was mainly China, and China was doing their best to contain it. So I would expect it to increase into here because we have so many countries. The good news is that the coronavirus it's an enveloped virus, and essentially those types of viruses are very sensitive to high relative humidity. So anything above 40%, relative humidity is above 40%, those viruses tend to not do so well. So we're coming into a warmer season, which is good. And so, when the summer comes, that's actually good. It's better than us coming into the fall right now with this virus. So, we'll see what happens on a day-to-day, but I'm continuing to track it here, and we're definitely not ignoring it. But we have to, like I said, we have to look at it in the context of what's happening. On balance, it may be stabilizing even if this is climbing, because there's just so many countries now that are showing the virus. So that's what I would say about that. So this curve is a summary, but it doesn't tell the whole story. We have to look into everything. So,
and then does it mean anything that there's been no little children die?
No, I mean, these viruses, they mutate, they're different strains. The coronavirus is an old virus. If you look on your Lysol can, it says kills coronavirus from, well, way before. But now they are seeing that in China just came out and said, there's two new strains. One of them is more deadly. One of them, it may enter your system and never leave, which, that's not that big of a deal, because many viruses do that. They get into your genome and they never leave. I mean, one example of that is herpes. It gets into your genome and it's there forever. But that viruses do that. So we got to just take that on balance. But the one thing I would say too, in addition to this graph, is that we really still don't understand everything about this virus. And I would say that, they're telling people not to wear masks and it doesn't matter. But the one thing that bothers me about that is every time you see on TV, all of these health officials, all of the doctors are wearing masks. So they're telling you not to wear a mask, but then all the doctors are wearing masks. So I can understand, I can appreciate what they're saying, that it's mainly transmitted by touch and touching your face and all of these things. But again, we still really don't know too much about it. And if you go back to the SARS virus, if you study that was actually transmitted through dust storms that went through Asia. There's these things called Asian dust storms, and off of Africa, the dust storms come off. And they found that these flu viruses travel on these particles. So, there's things about this. We don't know the whole picture yet. So, like I said, I would just take this day by day. We'll continue to track it, but it's just interesting hearing the developments that come out, because it's not really clear. The final outcome of this obviously is not very clear, and it's having a lot of impact on the economy right now.
Wow. Well, speaking of the economy, what's your feeling here of whether we're going to hold these lows or not? What anything that you see in the cards that could give us a little bit of a heads up?
Well, I'll just give you an around the world view here of what I have. This is the closing bell that I put out every day, and we're doing pretty well on most of these markets. The S&P, I still have that in an upside advantage, and I'll explain that in a minute. But it is possible that it can break those upside advantages, but we'll get to that in a minute. We've had copper down, which has been doing well, corn down, natural gas up, which is more or less flat. Oil, we had that is down, and we had the bond is up. I know that looks crazy, and I agree with you. You're talking about the bond. I'm going to show you some open interest in a few charts here, but the open interest on the bond is incredible on the put to call ratio. That ratio put to calls is very, I would say, bearish. But in terms of the signals, I think we did a good job of catching. I think overall we're doing a good job on these markets, but the S&P continues to be tricky for us. So, and these are unusual times, no doubt about it. So if we look at the planetary speed index here, it did a good job of modeling this last decline here. You can see we had that peak here right around February the 10th, and eventually the market did catch up with this planetary speed index. It had the low on the 26th and started rising back up, but now you can see it's flagging here ahead of this next top. This next top, now this is important. This next top is March the 9th to March the 10th. So this is a big date. We have Mercury station, we have full moon, we have all of these different things coming up around this date and this top. So this is a date of interest to watch. The only thing I don't like about looking at a short position right now is there's a lot of other things that aren't lining up yet. The Fed juice has not gone into a sell yet. To me, the Fed juice is the tape. So even if this is going against the Fed juice, I mean, eventually the Fed juice would turn, but I don't really see this in sync quite yet to the short side. So we're kind of in this weird position now where it's breaking the signal. Breaking the signal means Fed juice is in the buy and it's declining. That rarely happens, but it's happening right now. So, but I would like to quote your late friend Mark Douglas. I watch a lot of his videos. And one of the things that Mark Douglas always said was you cannot make a decision before the bar is closed. Before that bar closes, before that signal ends, you cannot sit here and project what you think is going to happen to the future. So we have to just wait and see what happens today at the close. And I emphasize that. You just got to remain calm and see what happens.
Wow.
Next chart here. This is something that I've been tracking now. This is a gold to oil pairs trade, and this is on a weekly chart. And you can see here when this line at the bottom down here, when this line goes up, crosses up, which is doing now, you go long on gold and you go short on oil. So you can see the divergence in these two right now. And this indicator is getting to be at an extreme right now. So to me, that's more of a bullish sign on the market. I mean, I would think that, if gold is topping out on this indicator and oil is bottoming, once this indicator turns, which it hasn't turned yet, it's a weekly time frame, then oil would be the long and gold would be the short. So it hasn't turned yet, but it's getting to these extreme levels. And I like to watch these because gold and oil can, sometimes they can travel together, but most of the time they travel opposite. You can go all the way back here into this 2018, and you can see that they traveled in opposite directions. Even when gold's going up, oil continues to go sideways. And then the recent run here, you can see gold up and oil down. So I like to look at the whole picture, and the whole picture to me doesn't look so negative. I mean, if you take in the coronavirus out of the picture, it's still relatively positive environment here.
Mm-hmm. That's good. Can you stay with us till after the break, Shane? Shane Smolyan, wolftrader.net. We'll be .com. We'll be right back after these few words.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Shane Smolyan of wolftrader.com. Shane, we have a question from one of our listeners. And is there a possibility, because we have this Mercury and full moon stuff coming up here on the 9th and 10th, that we might have a sort of a crash type scenario for Monday or Tuesday?
Well, that's a good question. So there's a lot of things that are lining up in that direction. The planetary speed index making a high for sure. The Mercury station and the full moon. Now, the only thing that's not lined up with that is the tape. The tape has to be rolling in that direction. So far, it's not. So,
Could you explain that, please?
That means that the Fed juice is not in a sell yet. So I can't. Okay. I'm not going to go against that. That's just how it is. I don't care what astrological event or cycle is telling me. If the tape isn't agreeing with that move, then the tape isn't agreeing with it. Now, if the Fed juice goes into a sell on the 9th and the 10th, then yeah, I mean that's a short opportunity. But right now, I don't see that quite yet. And I'm just quoting that Mark Douglas thing again. We cannot project our fears out into the future. You have to stay calm and cool. Just look at where we are. Stay in the present moment. Right now it's just the Fed juice is still in a buy. So when that's true, anything is possible, particularly to the upside. Now, this next chart. So hopefully that answers the question. It's going to depend on the tape. Okay.
Okay. Good.
Now, put to call ratio. This is S&P put to call ratio. This is from the CME. It's about 5-to-1 right now. That's pretty high. To me, that's a bullish setup. The other day when we saw that bottom around the end of February 28th area, we were about 9-to-1. We're 5-to-1 right now. That's generally a bullish number. It's not as high as it was before, but it's still pretty high. That's not bullish. Now, this next one you're going to like. I know, Larry, you're going to like this one because I know you already went to the crematorium, but you need to come back. You need to stop that process right now because the 30-year put-to-call ratio is 45-to-1. Now, wow. I've never seen a put ratio this high in my life, and this is from the CME. So I would say that that's arguing in your case that these bond yields are hitting a low, or the bond price is hitting a high. I still have this in a long position right now because I'm tracking the cycle and the tape. But eventually, I think you're right. I think when you get to levels this extreme, that's a bearish, ultra bearish situation. So we got to watch it. I mean, I'm still long on that bond. I still have that as an upside advantage. But eventually, if this number persists, that's bearish from that perspective, of the put to call ratios. And these heat maps on the CME. They're really good. You can track the different expirations, 0, 21, 45, but this is 45 days out. Even if you go out, 21 and 0 days, I mean, you're still ultra lopsided. So there's a lot of people piling on that trade. So, I mean, that's definitely not a bullish sign to me in the long term for sure. So I'm just pointing that out to people. It's just something. It's just one of the factors to look at. You got to look at the whole picture here, particularly with the coronavirus, because you got this coronavirus, but look at the jobs number today. The economy is relatively healthy. So it's confusing, and Mercury's making a station, and that makes things more confusing. So let's just look at the big thing. So the S&P, I talked about this before. I priced the S&P in terms of the Fed juice, and that's important. And I'm going to go to this chart now. Now I put this out in the newsletter. I talked in depth about this on the newsletter. But in essence, here's what I'm looking at here. This label here. And I have an A and a B label here on the chart. This is a long-term view of the S&P, and the Fed juice is very healthy, guys. It's still very healthy going up here. And if you look at the degree of the decline in the A move here, if you put a box around it, this B move here still has not equaled that decline. So if you look at it from that perspective, we're still 1 degree less than that A move there. And that means that if we don't take that low out down, if we don't equal that move, that in essence, it's still the bull market's still intact. Now, that doesn't mean it won't break the B down, but I'm just pointing stuff out. This is what we know. There's a lot of confusion right now with the corona. We don't know how to interpret this, but this we do know. We know that it hasn't broken to that same extreme that we had back in that December 2018, and we know that the Fed juice is strong. So those are the two things that we know. So to me, these are relatively bullish clues long term. And then when we price it in terms of the Fed juice, we're coming off of what I call these historic lows still. So, I mean, I feel pretty good about this long term. I mean, I know that we could have a washout here, maybe on that March the 9th. We do have some type of a washout, but that's relatively bullish. Now let's look at the daily Fed juice here. This is the daily. Now you can see it's very interesting, the behavior of the Fed. They went relatively flat during that decline. In other words, they held the ground, but the washout continued down into here. Now, I think my personal feeling is I think they were waiting for those put to call ratios to rise to get more shorts on that side of the trade. And you can see this uptick here in the daily Fed juice now. So now they're appearing that they're starting to ramp this up again. If you look down at the bottom down here, I can price the S&P in terms of the Fed juice on a daily time frame. So if you go each one of these lows that I say important low, that is a low that you see when the market is priced in terms of this Fed juice, and it tends to rally when you get to these lows. It tends to have these rally points, even on the short term. I mean, eventually it will get back up higher. Now we did have this Corona meltdown here, which again, that's not related to the Fed. But look at this right here. We're coming into another low here. We're coming into an important low when it priced in terms of the Fed juice. So to me, even on a daily time frame, that looks pretty good. I mean, I know that the fear dominates, and we have the reptilian part of our brain takes over, and the fear and all of this. But just remember, the Fed is still there, guys. The Fed's there every day. So we know this. So let's go over what we know. We know that the decline has not equaled the A decline yet. That's what we know. So again, number 2, long-term weekly, we know the Fed is still strong. 3, what do we know on the daily time frame? The Fed is still strong and it's ticking up. 4, what do we know on the daily time frame? It's approaching an important low here. So these are things that we know. Okay, so I just want to focus on that. Now,
wow, that's amazing stuff.
I mean, I'm just trying to point out, in all this confusion, what do we know? That's what we know.
Yeah, great, thank you.
Yeah. Now, you can price the S&P in other things. You can price the S&P in gold and different things. When you price the S&P in terms of gold, we're coming down to this 2011 support. So we're approaching lows, very, very strong lows on gold. When you price the S&P in terms of gold, we're approaching low, like really important support levels. So there's no doubt we're at an important support level. And, things do look really scary if you read the news and all this. But just looking at what I'm seeing here, it doesn't look too bad. I mean, and I do agree with you on that bond. I think eventually that bond's going to turn, and it's going to be massive. When does that happen? Not really clear yet, but we'll see. Now, this is the one that I really love. This should say priced in terms of natural gas. I love this one because on the weekly time frame, the S&P, you can price it, like I said, in Fed juice, you can price it in gold, you can price it in dollars. But this natural gas one, this really models the market beautifully. If you take a look here, I'm pricing the S&P in terms of natural gas. For whatever reason, this tracks the market beautifully on the long term on a weekly time frame. And going back here to this 2018, you can see on this 2018 low down into here, when this line crossed up here, in terms of natural gas, you see that had that beautiful run up into there. So we talk about this when we come back. Yep.
Yes, please do. We'll be right back, folks. Shane Smolyan, wolftrader.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back, folks, with Shane Smolyan, wolftrader.com. Shane, today's the anniversary of the bottom we made back on March 5th of 2009. Does that have any implications in your analysis at all? That's an old Gann stuff that used to be.
I mean, I look at the tape with the cycles. I don't really do Gann analysis. I know that he was very successful in his time, but I personally don't use it. I look at what the Fed is doing with the tape. Now, this is a chart here. This is the S&P daily, and I've colored the bars to show you when the Fed uses, when it's down, these are the red bars, and the green is the up bars. So we had this upside advantage here on the close of the third. So it went up that first day. It's down. It's still underwater right now, but keep it slightly underwater. keep in mind, though, that this hasn't crossed down yet. And this Fed juice down here, this is the Fed juice from the most recent Fed juice, the 2.0. And this is the original Fed juice here that I used back in that 2016 election. It was very successful. I always kept this original one up just so people could see it. And that's still, in a buy. So for me, I would like to see the Fed juice align with those cycles to the downside, because otherwise it's just going to be no advantage. So it's possible today at the close there'll be no advantage, and this was it broke the signal. Now, if it does break the signal, let's just say it does, and it continues down and it breaks lower and lower, then that can be perceived as a negative thing. And it's very rare. It's very rare that you get a buy signal like this and it breaks it, but it can happen. So it's just something to watch. But right now, I just don't see it yet, and I have to wait for that to unfold. And on the big picture, those other charts that I showed, I don't really. I mean, it looks pretty good. I know the coronavirus can change things, and that's an exogenous variable that comes in. But in terms of the Fed, they're definitely there to stimulate and to help us out, and they're going to come every day, and they're going to support this market. I mean, I think they will. So we'll just have to see what happens with that. So if anybody wants to get a hold of me, the website is Wolf Trader Futures, www.wolftraderfutures.com. It's previously wolftrader.net, but I changed the name, Wolf Trader Futures, because that's the name of the company, and then at Wolf Trader, FUTU1. And we have the two services there, the live streaming service, which is the gold package. I post all of those charts that you saw and more every day. And then we also have a newsletter, which just focuses mainly on the S&P 500. But I do have those variety of charts that I post, and each day I post these charts. So I have a copper chart. You can see this here: silver, gold, corn.